Hi friends, thank you so much for clicking on this video. My name is Rachel. Today we'll be talking about something very exciting, tax refunds. So we're thinking, my husband and I were thinking about what we wanted to do with our tax refund, and we're just brainstorming and coming up with different ideas. So I thought to make this video to share some of the ideas we came up with, just in case there's somebody out there wondering, oh, what am I supposed to do with my tax refund? How do I go about spending my coins? This video is for you. These are suggestions that I feel like you should consider when you're thinking about what to do with your tax refund. And I use the word consider very carefully because I'm not about to tell you what to do with your money. So these are just suggestions. I know some of my US buddies have already gotten their tax refund, so please leave a comment in the comment section. Tell me, what 3 things did you do with your tax refund this year? And if you haven't gotten it yet, what 3 things are you considering doing with your tax refund this year? So without further ado, I would like to say thank you to everyone that has subscribed, liked and commented on my videos, particularly to everyone you see on the screen right now that left a comment on my last video. I am so grateful for all the love and the support I have gotten so far. Thank you so much, guys. So yeah, let's get into it. So today it's a pen and a paper type of video. I wish I had a whiteboard, but I don't, so this book will just have to do. I have to turn the book this way. Am I the only one that writes like this? I feel like this is the only comfortable way to write. Anyway, so the very first thing that we are considering doing with our tax refund is, number 1 is emergency fund. Yes, I don't have the best handwriting. Just ignore. Is it fund or funds? I think it's supposed to be fund. Whatever, you understand what I mean. So what's an emergency fund? If you're hearing that for the first time, that is just money that you set aside for a rainy day. It's not a question of if something is going to pop up, it's a question of when. Like you all know, something is always happening. Every month something pops up, an unbudgeted expense. You need new tires, your fridge needs servicing, your car needs something, your kids need, like, something is always popping up every month like clockwork. So this emergency fund is money you set aside for rainy day. It's advised that you have at least 3 months of your expenses saved up. But some people go a step further and do like 6 months, some do 12 months, and some do like their income, their take-home pay for like 3 months, 6 months, or 12 months. However you feel like you need to do it, whatever you feel is best for your situation to make you feel comfortable, that is what you need to do. Personal finance is personal after all. So in our case, we're starting with a starter emergency fund of $2,000. Currently we have about 300 and something. So the first thing we'll be putting our tax refund towards is our emergency fund. So because we don't know exactly how much the tax refund is going to be, we are going to be using percentages in this video, and I'll suggest the same for you as well. If you already know what your tax refund would be, then by all means, you can allocate the funds however you choose. But in our case, we don't know because we haven't even filed taxes yet, but we do know we're going to get a refund because we have a lot of deductibles this year. So we are sure we're going to get a refund, but we just don't know how much. So in our case, we've planned to set aside 10% of whatever comes in to our emergency fund. Okay, all right. And I must say here that we need to know the real meaning of an emergency. We need to be very, very honest with ourselves. That extra pair of green shoes or purple shoes would not be an emergency. We should only take money from this account or from this purse in a real emergency, when you know that if you don't take care of this thing, things are going to get worse. Okay, not to go on a lunch date with your girls, not to go see a movie, not to buy new shoes, nothing like that. Just in a true emergency. Okay, all right. So the next thing that we are doing is debts. I have said this so many times on my channel. We have a line of credit currently, and the interest rate on that line of credit is ridiculous, guys. Like, it gives me a headache every day when I think about it, and I can't just stop looking at it. My husband says I should stop looking at it, that we'll pay it off when we pay it off, but it's something that is right in the middle of my throat. Like, I can't stop thinking about it. We started this debt at 4.74 interest rate. Right now is 8.99. Like, if I knew that it was going to go up this much, we most definitely would not have gone with this line of credit. So this is our number 2 priority. Definitely we want to get our emergency funds fully funded, but this one we absolutely have to send money in, and the bulk of our tax refund will be going to this one actually, because if you think about it, like, it's really good to save, to invest and do all of those things, but the surest way to get like an instant return on your money is to pay off debt. Like if you have a debt that is, like in our case for instance, 8.99 interest rates, putting $1,000 in that account instantly gives us a return on our investment of 8.99%, right? So that's a sure way to get a return on your money, pay off your debt. So in our case here, we are setting aside a whooping 60%. We're sending that to our debt this year from our tax refund. Just imagine if we got $10,000. Oh my God, that would be so awesome. All right, let me stop dreaming now. So that's it. Our number 2 thing that we'll be doing with our tax refund this year is paying off debts, or sending money towards debt. It definitely won't pay off, but at least still put us in a better position. Then number 3, this doesn't apply to us right now, but it's an advice to anyone that has children, is your kids' savings. Okay, so this is an opportunity. Some people will say, I don't make enough money to save for my kids, I don't have enough money left over after each paycheck. Now would be a good time to set something aside for those kids. Short-term savings, mid-term savings, and long-term. You can split it in different, percentages. Children will always need new clothes, they'll always need new shoes, they're always growing, and they're always asking for things. Like, I have nieces and children of my friends are always asking to go to McDonald's every week. So set something aside for their weekly spending, very little if I may add. Set something aside for their mid-term savings. So things like, in 6 months they're going to need to buy new shoes, they're going to need to buy, new clothes. If they go to a school that they wear uniforms, you might be needing to get some uniforms for them, or even if they don't wear uniforms, back to school items, all of those things. Set some money aside for them, because they're going to need it. And then for long-term savings for their college. Not every child is going to go to college, but you should be prepared in case your child wants to go to college. Then you have something to support them with and give them a better edge than what you had. I know a lot of people in my generation are drowning in student loans. Like, it's terrible. It's a student loan epidemic out here. But if you can do something to help your child in that line, then why not, right? So this would be an opportunity to save up something for them towards their future and to ease up the expenses of raising a child even in your own time. So in our own case, we're not putting anything aside in this one, so that would be 0% for us right now. But hopefully from next year we would start putting something into this one. So the next thing that we are currently considering is to get 1 month ahead on bills, right? We really like to get 1 month ahead. We already listed out all the bills that we have to pay in a month. We know for sure how much we pay every month on our electricity, on water, gas, and all of those things, even groceries. So we would really like to get 1 month ahead and have that amount. In our case, we are looking at $4,000. So if we can have $4,000 in a separate account for a month ahead and even pay our bills 1 month ahead, that would be fantastic. So we're going to be using a percentage of our tax refund this time around to put towards our 1 month ahead fund. So in this case here, we are setting aside 10% for this. Okay, and I would suggest you do the same. That just gives you some level of security, like you're not hopefully living paycheck to paycheck. You have a breather. Like at the end of February, you've already paid for March's bills. Like, it doesn't get any better than that. Well, it does get better than that. If you can do like 2 months ahead, 3 months ahead, and so on and so forth, the more the better, right? So that's our 4th plan for our refund this year. And then we move on to the 5th plan. Invest. This one I am very passionate about. So surely I would advise you set some money aside for investment. Many of us don't even have an idea of where to start, and it's really very normal. Like, we didn't grow up, with our parents teaching us how to invest or save or do all of those things. But now is the time to educate yourself. You've heard of investing many times. You've heard of a TFSA if you're in Canada. You've heard of an RRSP. If you're in the US, you've heard of a Roth IRA. You've heard of a 401k. Find out about those things. I bet they are not very far-fetched. There's so much information about investing online on YouTube. But of course, do your research. I did a video recently talking about dividend investing, dividend portfolio, and how to start from scratch. I'll leave a link to it in the cards above, so you can take a look at that, and it might give you a few ideas on where to start. So yeah, definitely we'll be putting some money aside for our investment account, and that would actually be 10%. So this 10% would set some aside for our retirement account and then some to our TFSA. The TFSA is the account where any money you put inside within the limit set by the government grows tax-free. So if we are lucky and we invest in a stock that does like 10x or 20x, the government has nothing to do with it. They can't touch it. So that's a good thing about the TFSA. And it's really your money. They allow you to take it out and spend it on whatever you want. It's just that once you take it out, you can't put it back in that same year. You have to wait till the next year to put it back in, but that's still fine. So this, in many cases, sounds like another emergency fund. Like if you have some money in your TFSA, for instance, and something really urgent pops up and you don't have any money from anywhere, this might be another emergency fund. Although it's not advisable to put an emergency fund in investments, because it may lead you to sell at a loss. If you really need money and you don't have any cash, any liquid cash, you may have to sell off at a loss. So it's advisable that this emergency fund should actually be liquid, maybe in a high yield savings account, something that you can get within a couple of hours to a couple of days. So this one is more long term for us. We are not looking to take from here. God willing, nothing happens and we don't have to dip into this. It's really towards our retirement and long term savings. And then lastly, the sixth thing that we are considering, in our case, fifth thing that we are considering doing with our tax refund, is paying a lump sum to our mortgage. Right. So in our case, we're looking to send 10%. Let me just write that there as well. We're looking to send 10%. So 10, 20, 30. 40 and 60, that makes it 100% altogether. We had planned to send some extra money to our mortgage each year, and this is just an opportunity to do so. With the tax refund, we'll be able to send 10%. The good thing about using percentages in our case, like I mentioned earlier, is because we have no idea what the tax refund is. But with this budget here, whatever it is, even if it's 2,000, 3,000, we just use these percentages and we are good to go. So I would really suggest that you look into setting up a budget for your tax refund before it arrives. That way you're not confused when the money hits your account. You're like, oh, all this money, what should I do? And then when you have money in your hand, that's really not the best time to start planning for it, because your brain just shuts down sometimes. I don't know if it's just me. So I like to plan ahead for my money. Before the money comes, I like to already know what I'm doing with it. So yeah, that's it, guys. Thank you so much for watching and have a great day. God bless. Bye.